All right, welcome back to my YouTube channel. This is Understanding Market Structure Part 2, and this is a very important video for you guys. I hope y'all take notes because this is going to be very helpful information and the foundation overall of trading. All right, so for me, market structure is always number one, and it's the foundation to everything. So I hope y'all pay attention because this is really important, and I can't get over how important this is. All right, so let me break this down for y'all. Done this video 2 times already, but something keeps on happening. First time, I was just screen recording my face and not the mic. All right, it doesn't matter. Let's get into it. All right, so market structure. We remember that uptrend is a bullish market structure going up. Downtrend is a bearish market structure. Downtrend is bearish market structure. All right, selling. So when it's going down, it sells and it's bearish. When it's going up, it's buys and it's bulls. All right, so just write that down. All right, because it's important for you to learn those things and so you don't get confused. So overall, let's do this. I'm gonna just go through the whole thing, identifying the market structures, the market structure, and so y'all can see sells and y'all can see buys. So y'all can see bearish structures and bullish structure. Okay, so y'all can see it and see what I do with it and how I do it. Okay, so we're starting right here, right? We're overall going up, right? I want you to see this. We're overall going up. Okay, so higher high, higher low, higher high, higher low, higher high. Oh, right. Let me label them for you. Higher high, higher low, higher high, higher low, higher high. These are all protected higher lows. Here's where the funny business happened. It showed you this lower high, and then since it's on a daily and it's on a high time frame, which is a strong time frame, you're like, okay, so did the buyers lose momentum, or are sellers stepping in? Like, what's going on? You gotta be iffy because the buyers didn't have enough to push up. Okay, so this higher low right here broken, right? You would get iffy after this lower high, same low, lower high. Here's the break, lower high. Here's the lower low, lower high. Iffy because it's a higher low, so we might go up. Nope, the lower high is protected. Remember, on a downtrend, lower high, as long as the lower high is protected, then it's still in trend. All right, write that down. As long as the lower high is protected on a downtrend, then the structure is still the same. Okay, write that down. So lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. I'm literally labeling them off for you guys. All right. So you saw this breaker structure right here transition into a bearish market, from bullish market to bearish market, from up to down. Transition is old. When I say transition or a transition phase, it just means when it goes from one trend to another trend, and when it's in the middle of that, when it's in the middle of doing that. All right. So yeah, lower high, lower low, lower high. You seen that? And look at the funny business it did right here. Here we've seen two confluences. We've seen a higher low with a bullish engulfing, which I would explain more about what the exact candles mean in another video. So here we're like, okay, higher low. Did the sellers run out of momentum? They might have. Let's see. Let's see and wait. Check these time frames. You drop down on these time frames, see if there's any breaks on the 2 hour, 4 hour, and stuff like that. And then you could take an entry off of there, but that's more complex, and then we'll get to that. Okay. So this lower high right here was broken. Okay. This lower high right here, boom. Protected this higher low, higher high, higher low, higher high. Protected this area right here. And what do we see? which is protected this higher low right here, which to another low. It's not a higher low and a higher low. It's a higher low and just a low. Higher high, higher low, higher high, higher low, higher high. And what do we see here? What do we see? See a break of support right here and coming back, and it came back. It broke the support right here, came for a lower low, right? Came for a lower low. We see this is a 38.2, and I pulled this fib out right now just to tell y'all that I will teach y'all more about this fib and the specifics about it, but a lower high is structurally 38.2 or more. So if this would have been at the 23.6 number, then it wouldn't have been a lower high, and you couldn't count it as a break of structure, because a break of structure is a break of a lower high, okay, or a higher low. So if it's a 38.2 or greater and it breaks, then it is. But if it's not, then it's not, okay? So this tool, I will be teaching you all about it, but it's a very important tool, okay? So here, you see how it broke this structure over here, right? It broke this structure back down this way to go back up, okay? Why? It tested it, higher low, higher high, higher low, higher high, right here, right here. Wasn't a that wasn't a I don't think that was a higher low. Let's see. You see? See? The wicks hit the 38.2, but the bodies didn't hit it. So the real higher low is right here. Because this is all not a 38.2. Okay? So let's keep going. Let's keep going. Okay? So came here. Came right here, and it didn't break this higher high right here, but maintained a higher low. In an uptrend, as long as the higher lows are maintained is what matters. In an uptrend, what matters is higher lows being maintained. It doesn't matter if there's a lower high, but if there's the higher lows being maintained, then the structure is still intact. Remember that. Write that down. Higher low, higher low, higher high, higher high, higher low, higher high. What happened now? Tell me what happened now on this one. Right here. Let me see. How do you do it? Boom. 38.2. Okay. It's a break of structure. Boom. Right. Broke. Came here. Made this low. Lower high. Lower low. Lower high. Lower low. Now guess what? Let me see if it's a break of structure. Okay. This is a structure point. Structure broke right here. Structure broke. It made the higher high. Higher low. 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 I'm I'm going like that, and I'm explaining each and every single one to you, so y'all could really know, like, this is important. This is the foundation. This is the basics of this. Like, the goal of this video is for y'all to look at a chart and not just stay frozen. Y'all at least look at a chart and be like, oh, these are the waves he was talking about. So I'm not gonna lie. Look, Vivi told me about these. Up, high. Wait, higher high, because this higher high is, instead of it's greater than this one, it's higher high. Look, it went back down, but it's big. It's higher than this one. So this low is higher than this low. Came back up, broke this high, so it's a higher high. Came over here, it's a higher low because it's lower than this low. Higher high, higher low. Oh, let me see. Look, it was a higher low. Why did it go all the way down past it? Oh, it's a break of structure back to the transition area. All right. I literally went step by step And I know I keep telling y'all this, but this is very, 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 very important. Higher highs and higher lows, and higher lows, higher highs, and lower highs is what makes a market structure. Is what makes a trend. So what makes an uptrend. It's what makes a downtrend. It's what makes people buy. What makes people sell. It's all of that. Okay. So very important video overall. The goal of this video was for you guys to just get in the video, like watch this video, finish this video, maybe watch it 2 or 3 times, because if I were you, I'd watch it 2 or 3 times. There's gonna be more videos to come where I'm gonna explain more in depth and jump more into it, because there's market structures on each time frame, and sometimes a market structure looks like it's a structure area looks like it's broken on one time frame, but it's not broken on the other time frame, and it gets complex. You know what I'm saying? Like, also about the tested candles, how to work the fib levels, like a whole bunch of stuff that I still gotta explain. Support, regular support and resistance, the difference between support, resistance, and a structure level, which I told y'all here a little bit. 23.6 is a support and resistance level. Whichever way you pull the fibs, which I will show you how to pull the fibs. 38.2 and lower is a structural point. So it's a structure point. So overall, and I'm also going to introduce more terminology so I can be able to talk to you guys with more, like, with the real words, because I'm like not using the exact words, but overall I'm trying to get y'all to understand it with me. So fibs is the tool that I use to measure um if it's a structural point. Okay, this one. Okay, we know that the structure right here. Okay, go right here, boom, you pull the fibs from right there, it comes here, right? We know that if it goes to 23.6, it's a support and resistance level. So it could keep going and still be in it could still be on an uptrend, okay? Now, if it breaks the 38, like if it does this, right? If it does this, comes to the 38.2, comes over here and breaks, broke structure, right? But if it's up here, we pull the fib, comes here, goes up, goes down here, that's not a break of structure. This is the real higher low. Okay? This wasn't the higher low. Alright? But we'll get deeper into that, because you gotta know how to pull it and do all of that. But overall, I don't think this video was this long. I think it was short and sweet. This was the third time I did this video, because the first time something happened when the screen recording, and the second time somebody came in my room. So I had to start all over. But overall, thank you if you made it to this long. I really appreciate the support. Comment down below if you learned at least one thing from this video, or if it was helpful to you. I feel like I'm trying to make it as simple as possible right now, since it is the second overall video that I'm teaching, like actually trying to teach y'all like the basis of it. On the first 2 videos, I was just breaking down what I did on my trade, but this is so y'all could understand when I do my breakdowns, y'all could keep up and know what I'm saying, what I'm talking about, and what I mean. Okay? So overall, thank you. Leave a like, comment, leave a comment. Tell me what I could do better. Tell me if y'all didn't understand something. I will answer it. And overall, just subscribe if you like the video, if you felt like, oh, like you understand how I'm saying it, if I'm explaining it to you right. Overall, just give me feedback, because I am gonna keep doing these videos and I'm gonna keep explaining it better. So overall, thank you so much, and just let's keep growing together. All right, do it.